Today, we're diving into the pulse of the market through the lens of the most influential players in the game, CEOs. With insider buying often seen as a strong signal of confidence, we're zeroing in on the top 5 CEO stock purchases of Q1 2024. Let's get started. Today, we are talking about insider buying again. Insider buying, as we know, can be a telling indicator of future share prices, and arguably, there is no better insider than the CEO. But going along with that, CEO buying isn't just enough to support price action. It does take institutional and analyst involvement to keep a stock running. So let's dive into the stock, this list of stocks that you have today for us, Thomas. These are 5 of the most significant CEO purchases that we've seen in Q1 based on a dollar volume. So let's start off with Allegion. It's a Dublin-based security firm that's focused on doors. So why don't you tell us about CEO John Stone here and what's ahead for this company?
Yeah, I just want to start for a second saying that this article really is a result of using MarketBeat screening tools. So many tools for investors. It's kind of ridiculous how many tools there are. But this one just kind of ranks insider buying by CEOs. You're able to toggle the list, and I toggle this one to rank it by dollar volume. So John Stone, his purchase in Q1 is the 7th largest by a CEO. That got him on the radar, puts him in 5th spot as far as this list goes. So his buying is offsetting some selling by other insiders. That selling is associated with share-based compensation. The two things kind of balance each other out. But the company's also being supported by institutional buyers. They own 92% of the stock. And the company is expecting a return to growth and margin expansion over the next year or 18 months. And that's really got the market kind of jazzed on it. The valuation of the stock's a little bit high compared to consensus estimates, but the analysts are raising their targets. So I think that if this stock were to pull back, it would be an opportune time to buy it.
Awesome. Well, next we're looking at Marpai. Their CEO notably increased its holdings along with a positive outlook for hypergrowth. Given the AI-powered businesses service disruption potential, Thomas, what should investors watch out for in this high growth phase? Secure your financial future with MarketBeat's exclusive report, 7 stocks to buy and hold forever. Dive into the insights of proven winners for income investors as our list reveals why these 7 stocks boast very promising long-term outlooks. Don't miss out on the opportunity to grow your wealth with confidence. Download this free report today and start building a portfolio that stands the test of time.
Yeah, well, this one's interesting because insiders have only bought this stock for years. Insiders, large shareholders, and institutions own about 60% of the stock. The CEO actually purchased twice in Q1, and those 2 purchases effectively tripled his holdings. So if that's not a vote of confidence for the business, I don't know what is. There's absolutely no reason for him to buy so many shares at such a time without a positive outlook for the business. Now, the outlook for the business is hyper growth. This is an AI-powered business services company who's focusing on self-insuring employers. It's a multi-billion-dollar industry that could be easily disrupted by AI. This is definitely a stock to watch.
All right, well, next we're looking at Keurig Dr Pepper. They saw significant insider buying, including a $5 million purchase by the CEO against a backdrop of institutional selling. So how does this kind of contrast affect the stock's valuation and appeal to individual investors, Thomas?
Right. So this CEO purchase is significant because it almost hit $5 million. It's our 3rd largest purchase by a CEO on this list. That purchase is compounded by another purchase by an insider. Together, they bought 7.5 million worth of shares. This is offset by a large shareholder. Jab Holdings is selling, but Jab owns like 20% of the company. They're selling into a rally and taking profits. That's probably a good thing for them. Not really a worry because the other institutions, ex-Jab, are still buying the stock. And the analysts view it as a deep value trading below the low end of their range. I think that Dr. Pepper is going to be heading higher this year.
All right, number 2 on your list, we're looking at Snowflake. They made big news when it announced a surprise CEO transition. Their new CEO immediately purchased $5 million in shares. So how should investors interpret the timing and transition of this investment?
Well, right. The surprise CEO transition certainly caused a stock price implosion. It raised some questions about the company's future. But the new CEO was an existing exec. He came on board with an acquisition last year. He is an AI-centric person. He will help take the company on its next phase into this budding world of AI that we live in today. So significant about him is the announcement of his appointment as CEO caused a major stock price implosion, and he bought the dip. He didn't need to buy more shares. He already had some added to his holdings. Institutions are also buying this stock, and the analysts see 30% upside at the midpoint. Their estimates are rising. So I think this is certainly a buy the dip opportunity for investors.
All right. Well, the number one stock bought by a CEO in Q1 is Sphere Entertainment, formerly Madison Square Garden. CEO James Lawrence Dolan made 3 purchases for $11 million. Now, these are significant because they include the largest purchase by an insider and 2 additional trades on par with that amount. What else are we looking at here with this investment, Thomas?
Right. This is another huge vote of confidence by a CEO. I mean, for him to buy one lot was awesome. $5 million was a big purchase, but to follow it up with 2 more purchases and double that to almost $11 million is a huge sign. All 3 of those purchases are top 5 as far as the last 3 months of insider trading goes. Institutions are also buying. The company has a great outlook. Its international growth trajectory and the franchising opportunity is significant. However, the analysts are dragging on the price action right now. They think there's going to be a couple of soft quarters ahead. But again, that long-term outlook is what's keeping them in the market. They're concerned right now about capacity utilization in the wake of this event that happened a few years ago. Still not quite back up to full speed, but it is coming. So again, great vote of confidence. There's a possibility for a stock price pullback. I would view that as a buying opportunity based on the long-term outlook.
Well, sounds like there's some great buying opportunities here. Thank you to everyone who tuned into our discussion of CEO stock purchases and what it means for investors. As we've seen, the decisions made by these leaders can offer valuable signals for the future. It's underlying the importance of keeping a close eye on where insiders are putting their money. Stay tuned for more insights and analysis to guide you through your investments right here at MarketBeat. Thanks, Thomas. We'll talk soon.